So it sounds like some of the buying on the dip mentalities is running strong through your veins right now. Why is that?
Yeah, I would say that all that red and green on the screen, Brad, reminds me that Christmas is coming, and there's likely to be a Santa Claus rally ahead, as I believe that the final 4 weeks of December are going to provide the cherry on top of the 2024 investing sundae. However, beyond that, although I believe there are growth opportunities ahead in 2025, I think those growth opportunities will be more muted than what we saw in 2024 and 2023. So investors will need to be more selective. Consider all of the record closes that have taken place this year, the lack of downside volatility, and of course, those excessive valuations that are even in that large cap growth technology space. I'm not saying to abandon that space, but perhaps look beyond the Mag 7 to some of those other 493 names that are still trading at attractive valuations and are likely to benefit from some other tailwinds that I see in the markets moving forward.
Kevin, when it comes to some of those, I guess, hesitations amongst investors right now when it comes to valuations, how much of that is overdone maybe at this point? And what is that one thing that you think investors need to keep in mind as we do head into the new year?
Sure. We'll talk about one area. We talked about the Mag 7 and this ongoing theme about the AI revolution. Look, the AI revolution is going to be a very long road, filled with many potholes along the way. So investors will need to realize that investing in the AI revolution is a long game. And all this CapEx spending that's taking place with some of these large cap technology names may not benefit their bottom lines for quarters, if not years to come. The companies realize that, investors need to realize that as well. So perhaps valuation is as an important consideration in those areas. But there are other areas as well beyond that. I think about one sector that's exploding right now, no pun intended, that being aerospace and defense stocks. Clearly, our country needs to upgrade, replenish, and modernize our military capabilities, and those stocks are benefiting from that. And if there is more money spent in those areas going forward, expect those large cap defense contractors to benefit, and some of the smaller cap names like a Kratos Defense that are going to benefit from modernizing our capabilities with technology such as drones.
What are the sectors you'd be rotating out of right now, Kevin?
I don't know necessarily, Brett, if I'd be rotating out of specific sectors rather than overweighting other sectors. Some sectors that I really like right now, how about banking, financials? I believe at this point in time that regional banking hangover that took place after the regional banking crisis perhaps has been cured. And the antidote for that crisis and that hangover is exactly what led to that crisis in the first place. We see now lower short-term interest rates, declining treasury bond prices, and now the prospects for more financial regulations dwindling, which could lead to more M&A activity down the road. So perhaps some of those beaten up regional banking stocks that don't have large commercial real estate exposure and also strong balance sheets are worthy of consideration. Aerospace and defense, another great area to move into. I love the energy play, Brad, that's associated with the AI revolution. So look at those REITs, the data centers, and then the cooling solutions that are so desperately needed by those data centers. There are so many growth opportunities ahead, but we need to be selective, and it's not going to be like the last 2 years when you could just throw a dart and anything in the S&P 500 was going higher, led by the Mag 7. Now we're going to need to be a lot more selective, I believe, in the new year. And then we haven't even spoken about the Fed yet in terms of what they may or may not do in the month of December.
Kevin, you mentioned M&A, and I'm just curious, just taking a step back more broadly speaking, and really just across sectors, how big of a catalyst do you see that being in the new year?
Tremendous. Tremendous. I believe that the opportunities that exist in MA, not just in terms of regional banks, but also in terms of smaller cap biotech companies, are going to present investors with tremendous potential growth opportunities. Look at biotech right now in the state of healthcare in our country. Most large cap pharmaceutical companies are being pressured to lower their drug prices. They also have a lot of large revenue producing drugs coming off a patent and being subject to generic pricing. Where are they going to turn, Seana, to replace all that lost revenue potential? Well, I believe they're going to have to be acquisitive, and they're going to look to buy those innovative healthcare solutions that the small cap biotech companies are providing, whether it's gene editing, gene splicing, antibody treatments. We could all name the various innovative therapies that are being developed. Look for more M&A activity there and also on the banking front, and that could even extend into other areas as well.
Kevin Mahn, thanks so much for your time. Thanks so much for taking the time to join us here.
My pleasure. Have a great day.